All right, we are going live, everybody. Happy Valentine's Day. I'm coming at you from sunny Southern California. Got some big stuff in store I'll be able to share with everybody very soon, so stay tuned for that. We're going to have a big life shift happening, and I just hope everyone else out there watching cryptocurrencies, building their own e-commerce businesses through Amazon, whatever entrepreneurial or whatever journey you're out on right now, I think it's still early in the year and we have a lot to capitalize on. So we're going to be looking at this live stream in a couple of different sections. We're going to be talking about what do interest rates do to the stock market? What do they do to cryptocurrencies? Because we're having, that's kind of the big issue at hand right now, which is what creates a lot of people to rush into Bitcoin when we have a lot of inflation, when the US dollar gets printed just astronomically. I mean, I think we had over 80% of all US dollar bills, they were printed, 80% of US dollar bills were printed in the last year that are out there in all of existence. So that's sparking people to go check out cryptocurrencies. Now, I have two charts pulled up here real quick for everybody to see. We have Bitcoin here on the daily chart. So we did break out from the lows around 33,000 just coming into the beginning of this month, February. We're halfway through that month already, hard to believe. But we did shoot up to 45,000 and then got rejected down to our support line here at about 41,500. Now, I want to show you a measurement between the US NASDAQ chart, which is the top 100 tech companies, how that's faring versus Bitcoin, because the NASDAQ was very correlated. The US stock market was very correlated to how the Bitcoin price was trading lately. It's like Bitcoin was one of these tech stocks. That's how it was pretty much trading. But I want to show you here, since the bottom, Bitcoin actually managed to rally up 29%. And that does not really stand true for the US NASDAQ market here, which only rallied up about 4% to where we are now. So Bitcoin is finally decoupling itself from the US stock market, which is really good. We want to see that. So I was happy to see that. And that's going to allow more people to use Bitcoin for they were saying it's a risk-on investment, but when we're starting to see war, which we're going to cover in a little bit, war in Russia invading Ukraine, now Bitcoin is also seen as a safe haven for people to get into that currency because it's able to be used around the entire world. No matter if the US dollar is being printed excessively or other countries' currencies are being devalued, people are going to have more of a reason to get into Bitcoin, which in turn will help all the different altcoins pump, and that's what I'm heavily invested in right now. So if I have anyone tuning in right now, drop to me where you guys are coming in at right now, and I'm out here in California, so loving it. But we're going to jump in right now and actually look at a couple of charts here so we can see when inflation starts to go up. So when the US starts printing more capital, we see that show here right in the chart, and then that's what spurs Bitcoin to go up. People are like, why would I hold US dollars when cryptocurrency is actually deflationary? I mean, there's only 21 million Bitcoin ever to be mined, and speaking of mining, the hash ribbons and the hash rate is actually at an all-time high, which keeps the Bitcoin protocol more secure than it's ever been before. And with each Bitcoin being mined, it costs more and more energy to actually mine that. So you can see this as an all-time high of the Bitcoin hash rate, which exploded by 30%. That means people are willing to pay more money to create Bitcoin because it's still that profitable. This is going to in turn just keep the price of Bitcoin higher because it costs more to produce them now. And this is also possibly seen as a bearish indicator because with the hash rate, it's consuming more energy, which could spur the critics to say, oh, Bitcoin takes too much energy up. But we all know that, I mean, credit card transactions and bank wires, bank transfers, all these things with traditional banking take up way more electricity and energy than Bitcoin does itself. So that's one thing I wanted to show there. But when inflation goes up, Bitcoin goes up. When inflation goes down, the price of Bitcoin usually tends to die off and go into a bear market. Now, if we look at where the inflation graph is right now, you can see it's literally at an all-time high at about, they're saying 7.5%, which is not even a true number, because if we look at the consumer price index, what people are actually having to pay for in real life, you can see the percentages are up so much higher. Used vehicles are up 40%, gasoline up 40%, rental cars up 30%, hotel rooms, where I'm staying right now, up 20% since 12 months ago. So in the last year, food at home costs are up 7.4%. New vehicles up 12%. But I mean, used vehicles, you can see where the consumers are really being hit with this inflation, and it's really hitting us hard with gasoline and vehicles, transportation, household energy up 15%. So for the Fed to come out and say, oh, we're only at a 7% 7% inflation rate, it's kind of bogus, as you can see based on all these other numbers right here in this tweet from Andreas. But that's really going to come to pass here soon, and people are going to realize, I mean, when you see this spike in inflation, we haven't really seen that spike in the Bitcoin price yet. And I mean, the only time Bitcoin really starts to surge is when inflation starts to surge as well. So one thing I want to show you guys also about interest rates here is this little graph right here. So every time the Fed has raised interest rates, people freak out about it. But all that pricing is already, I mean, all those interest rates have already been priced into the crypto market and the stock market. So the second the news comes out about something, immediately the prices change in the markets. But when the actual event comes, a lot of times the opposite will really happen. So if everyone's thinking the market's going to tank by the time the first interest rate spike comes, which they're saying is going to be around March 16th, they're going to raise interest rates by potentially 0.25 or 0.5%, which is really small. In the 80s, they had to tackle inflation by shooting interest rates up to 20%. The Fed's only talking about increasing rates up to a total of 1% this year. So it's not really going to make a dent in what we saw with the real consumer price index and all that. But as I was saying, as the prices have already been factored in, and the news is already broken that the rates are going to increase at some point. So by the time that event really comes, March 16th happens, and they raise rates by 0.5%, usually if everyone thinks it's going to dump because of that, the news has already been factored in to the price. So usually we get a green uptick from that. And you can actually see it right here. The only time we had a negative stock market day after the Fed raised rates was in the 1970s, and the stock market went down by 7%. But look, every other time the Feds have increased interest rates, in the 80s, they went from a 5% interest rate to a 20% interest rate, just like I was talking about, and the stock market pumped by 68%. When everyone thought it was going to dump, rates increased, and the stock market pumped. The same happened in later in the 80s. They went from 9.5% to 11.5%. Stock market rallied by 8%. Just about to be in the 90s, the interest rates went up by 3.75% over 3 years in the mid 80s to upper 80s, and the stock market pumped by 52%. That's insane. The same happened even up till 2015 through 2018. The rates were very similar to what we were dealing with just now at 0%, and they went all the way up to 2.5%, which is much higher than the Fed's even talking about raising rates right now, and the market still surged by 28%. So that's the historical data from The source is Fred here, so this is the actual federal information from the government releasing this data here right now. So based on this, if the days the rates actually get raised, we may see a major surge in the crypto price. So what's up, guys? How are we doing? Drop some thumbs up on this one. Streaming on Valentine's Day. You know what we do. You know how we do. Let's jump into a little more. Where are you guys tuning in from? What's up? Saying what's up to the chat. What's up to the chat? Waking everybody up. How we doing? Where are you guys tuning in from? So yeah, we're covering Bitcoin and inflation. We just talked about the CPI, Consumer Price Index. Even though the Fed's talking like, hey, we're only at a 7.5% interest rate, inflation rate, really the consumers are getting hit with increases of 40% on common everyday things that we have to use like gasoline. Let's jump in here. We talked about the hash rate, how it's at an all-time high, how that's a bullish signal because this has the higher the hash rate is, the more invested the Bitcoin miners are in keeping the Bitcoin blockchain safe, and it's potentially negative because the critics will say, hey, you're using more energy, but Bitcoin uses much less energy than traditional banking systems anyway. Now, let's get a little look at where we're at in the charts with the price right now, and we're getting a lot of similarities here. So we're talking about comparing major bottoms and fight to regain the Bitcoin support band here. Long wick rejection on a weekly close. So we're hitting all three with all of these different signs right now. And each time this happened, it led to a massive increase. And we're getting that same thing. If you look closely, 2019, we came up and had a rejection off the Bitcoin support band with a long candle wick just like that. Same thing happened right here in 2020. And what happened after that? We just continually started surging right through. We were also below 50 on the RSI, which they mentioned there as well. And we're below 50 on the RSI right now. And we had the long wick candle body rejection on the weekly here again. So this is the beginning of a brand new week right now. So we'll be able to see if we can really start to see green candles bust through the Bitcoin support band. Even looking at the MACD here, we got a bullish cross and we switched from red to green on the MACD. Same thing happened here. All three systems are a go, and we're getting that same cross looking likely right now. We're putting a bottom in there and we're weaning off into the green again. So that's what I'm looking at right now for where we're at with the Bitcoin price. Now, cheers everybody, because we're going to have a little sip. And we're going to talk a little bit about how the markets have been damaged when Russia or war or anything like that is at our front door. So cheers to anyone out there right now. Drop a thumbs up. Tasty. Okay, so let's zoom in here, shall we? We're going to look at what was the huge hype and craziness when Russia entered Ukraine in February of 2014. Well, look at the craziness. We had this little drop, and that's all it really did in the grand scheme of things. So when you zoom out, you realize a lot of this media hype and propped up craziness is just to manipulate people into selling their shares to lower it for the whales to come in and buy it. And I'm holding all my bags, so I'm packed and ready, and next time we start to rally again, I'll be happy I didn't sell at the lows where we're at with the market in the S&P right here, and everyone knows where we're at in the Bitcoin market. Let's take a look and really get a look at where we're at here, as we did have that nice 30% pump from the bottom up to where we're at right now, above our major support level at $40,000 to $42,000. We're at $42,600 right now. Actually, if we zoom in, we can see we are still in a straight up channel right here at the near the top of the channel. But one thing that I'm looking at to see where we're potentially going to be breaking out, on what side we may break out to, let me show you, because pull up my indicators here, and then we'll jump right into kind of what's going on with Russia and everything, like I was going to say. But when you're seeing more solid red candles here, this is where the most liquidity is. They're selling, a lot of selling liquidity here, and there's a lot of money in each of these red candlesticks. Now, since the moving averages are going basically sideways right now, there's no volatility in this chart, in this channel right now. I'm seeing a lot of wicks to the downside. So the market makers are grabbing all this liquidity from the lows, and they're creating these huge sell candles, which really it's the retail market selling and shorting right now. And the only person on the other side of this order, when people are selling, is a buyer. So really, the market makers are stacking all the retail shorts, retail sellers, retail investors. The market makers are stacking their sells, their sell orders as longs. So market makers are building longs right now every time people are selling in this little area. And that leads me to believe we're going to have a pretty big surge to the upside when you look at this channel here right now. So that's kind of where we're at with that. But we're talking Russia entering Ukraine. You see how big of a dip it did to the market. That's what everyone's freaking out about. And if you're willing to sell based on a short-term thing like this, then you just don't have the patience to make it through, guys. That's what you got to do. Coming in one more time, want to look at the average percentages of market declines every time we have like a major invasion or bombing around the world. So you see, even in the bombing, around the time of the bombing of Syria in 2017, the total market drag down was 1.2%. North Korean missile crisis, which was in the news heavily, the whole market only totally went down 0.15%. So you can see the biggest decline was actually Iraq's invasion of Kuwait. And that's probably, I mean, we went down almost 17% at that time. Pearl Harbor attack went down 20%. But these are like massive wars. The U.S. terror attacks, 9/11, market went down 11.6%. So with Russia invading Ukraine, I don't see it as one of these major days like, anything like Pearl Harbor or Iraq's invasion of Kuwait. With that one, there's probably a lot of oil up at stake there, and that's going to cause more volatility in the markets. Now, one of the last things I want to show you guys is actually talking about investing in your cryptocurrency and actually staking it. So when you hold certain coins, you can put them into special wallets that will yield you an annual percentage return on however much you have in there. So, for instance, there's a place, there's a token called Luna, and you can search this up, and with this coin you can actually invest and get 20% per year through another chain called Anchor. So right now this coin is very much down, like everything is, especially the altcoins. But when you come over to Terra, this is their website, and you'll be able to see where you can start building different ecosystems and decentralized applications on the Terra ecosystem. That's where you can start building NFTs and other things like that. And then they have the industry-leading decentralized stablecoin UST. Now, the creator of this whole Terra Luna blockchain has said he has a special like self-destruct button in case the government ever tries to come in and be like, hey, you gotta like centralize this stuff. He can press a button and like make it so this thing will just run on its own and be 1,000,000% decentralized. So that's pretty cool. But then you're able to really see where you can start staking and build out a financial passive income for yourself. So there's a lot to look at here. This is one of the best protocols. It's one of the top 10 coins. And what I was really showing you here is that 20% per year holding your stablecoin UST on their platform, that's so much more than you get from, Bank of America here, who, if you have over $2,500 in one of their accounts, great, you get 0.02% APY. With decentralized cryptocurrency staking, you're looking at, on the safe and low end, like 8%. On the medium risk end, you're looking at, like with Luna, you're looking at 20%. And then there's other DeFi plays where you can invest your coins and literally make hundreds of percent, even like 1,000% per year. So you just put your crypto in there, let it sit, and it just builds you an interest every single day, even with some cases. Like I have a Pancake Swap where I've staked some of my cake tokens on Pancake Swap in a syrup pool, and it's making me 100% APY, and it's almost been a year since I put it in there, and it has yielded me over 100% of my investment. So if I only put in like a bunch of money, it is kind of risky though, because it's all decentralized, and if something goes crazy, there's no way to get it back, kind of thing. But I put in like $500 and it turned into, now I have over 1,000 in it, and it was a lot better than what these banks are offering here. At you're one of the Diamond Honors members, and you get 0.04% interest for keeping your US dollar that's devaluing by over 7% due to inflation every year at least. This doesn't even put a dent in that. So holding your US dollars is becoming less and less smart. So that's kind of what we're looking at. And then the last thing I want to introduce everyone else to who hasn't already seen, I built my channel based on selling products on Amazon. And that's where I get my money to invest into cryptocurrency. And I'm offering my Amazon Seller Pro course where I have over 500 students. I even put my dad onto this and so many other good friends. And if I just go through my video list here, I've been doing a lot of crypto videos, but if you start going back down a little bit, ever since I moved to Florida and Miami, that is literally the moment that I started getting into crypto exactly a year ago, right around on Valentine's Day. But right before that, you see helping Amazon students in person, FBA coaching, and Amazon success students, profit reports. This is all Amazon, FBA, Amazon student success. And, that's where I was able to actually build a course. I'm talking here in Miami about, how to build this passive income on Amazon. Because what you really do is, let's see, and we even have a little clip in here with Pops. You got to see Dad on here, man. You got to see Dad. So he's saying, he's like, hey, we made some sales today. And you can see the hours there, 11 hours, 9 hours, 8 hours ago. These are all sales in one day for just my dad. So he took my course, and that was pretty cool. But you can see I have every video structured out for you, setting up your Amazon FBA business with product liability insurance, Amazon taxes, all these things that you need to know. And if you don't know, they're landmines that could have some issues with the future of your business. But then I talk about how to find products. But all in all, after you find your product, then you go find a supplier. And then that supplier is able to put your own logo and branding on it, just like on Simple Wine Brands thing, whatever. They just get a wine product and put their logo on it, and then they have their private label product. Then you send it in bulk into Amazon, and then you rank it up to page 1, which I show you how to do right after after you set up your listing in Amazon and get a Amazon warehouse address that you create a shipping plan for, and then you give those box labels to your suppliers. then they ship your private label product right on into Amazon, and then you're able to rank to page 1 like I show you here in the marketing and advertising strategy here, where I talk about how you can advertise it and launch your product. And then, you know, Brian Pate, again, got to mention him, like $14,000 in sales in his second day selling. So that was insane. And we have a whole video with him here. But yeah, that's kind of how you do it. And I like this business because, I mean, unlike crypto, with crypto, you're kind of going with the news and you don't have full control of what you're really into. But with Amazon FBA, you have full control of your business. You see what the profit margins are before you buy your product. You get the best deals from your suppliers. So you're able to actually see on Amazon how much money a month certain products make. So, you know, if I'm looking around the room, what could be a crazy product? And there's so many different product research methods. Like I can do a minus and a bunch of random keywords, and then I can come over to this home and kitchen category. And this is like one of my secrets for finding good products. So I can sort by the price high to low, and then I can come down and see there's 400 pages there. I'll click on page 2, and after that's clicked, it'll show me up here in the URL page equals 2. I'll just switch that to like a page equals 160. And then, so since we sorted by price high to low, we have some stability in price here. So now we see everything around that $124 price level on page 160. I could jump to other pages, but now if we find a unique product up in here, a room divider, that's kind of interesting. It might be a little big, but we're in, you know, custom furniture configurations or clothing. Let's go find something a little more unique, because we don't want to find something that could be easily bought in Walmart or something like that. So let's see. In the home and kitchen category, you know, you're going to find a lot of that basic stuff. But okay, squirrel feeder or bird feeder. Okay, that's got a ton of reviews. But just to give you an idea, let's say we did find a cool product, bird feeder. We'll just type that in, and then we'll find all the bird feeders. Then there's the tool that you use to actually see how many sales the products are making. So then you have all the data you need to know, and you're like, hey, this guy's making more sales than this person, probably because of this reason. And then you start building your product out, and I love bundling. So if it's just a bird feeder, like a lot of these listings are, maybe bundle with 2 bird feeders and sell it for a similar price. But this is where you're able to see their revenue and sales. So each one of these listings, this guy is making 400 sales a month. This person's making 8,000 sales a month, making 173 grand a month in sales. So that's, and it's literally just with one of these bird feeders. Now, this is too competitive, of course, because there's 10,000 reviews, and I'm sure all the bird feeders have high reviews, which we can see right here, all this review count. But yeah, there's a ton of different ways to find sweet products. And once you find them, you just do the rest of the work that I have outlined for you in the Amazon course, and you set yourself up to make money so you can go invest into crypto, where you can be a business owner and an investor. And that's the way to do it. If you guys know anything about Robert Kiyosaki, you'll know that he does the quadrants. So let's see, Robert, yeah, Kiyosaki. Okay, let's do that, and then see. Let's see. Yeah, he's got these quadrants. And if you guys, I'm sure a lot of people have read Rich Dad, Poor Dad, but you're able to see, let's let's take a quick look at this because this is kind of important.
Hey guys, it's Practical Psychology, and this video is...
Okay, that's a video. Basically, there's four money, it's the cash flow quadrant. So you can be an employee, you can be a self-employed business owner, and these are the people that end up spending a ton of money in taxes, and they just go through a cycle of debt and losing money all the time. But when you go over to the other side of the cash flow quadrants, you have a business owner and an investor. And this is where you own a system that works for you. When you're self-employed, you just own your own job, but you're still working in that business and you're still working for a job. But with the business, like with Amazon FBA Business, you own something where when you ship in a bulk amount of products to the Amazon warehouses and rank your product up, then the business works for you. I don't even have to do anything, and Amazon will pick, pack, and ship. They ship out all my products whenever I make orders to my customers, and I have an automated email follow-up to get reviews, but that business works for me. All I have to do is say, hey, suppliers, I'm out of inventory, and they ship more in. So that's when your passive income is actually coming from a business. Now you can make passive income as an investor too, where you just make your money work for you. Now to be an investor, you definitely need more money to play with, because I always talk about if you only make, and they have this here too, but if you only make a little bit of money and you put that in for an investment, you put in $200, well, if it doubles, great, you have $400. But if you put in $100,000 and it doubles, now you have $200,000. So you got to be playing with a bigger amount to really capitalize on being an investor. I like this here, self-employed, you own a job, you have no leverage, 95% of the population is doing this, and the amount of active work determines income. So your time equals money. With Amazon FBA, people work with you. You have the Amazon platform, you have Amazon warehouse services, you have the people that go out and deliver your packages. When you're an employee, you have no leverage. You have a very, basically, again, all your time is being traded for money. So with the investor, your money works for you, and that's what you need. You need money to make more money. Business owner, you have people help you make more money. So it's kind of interesting, but that's kind of where I want to tap this video out. So thanks so much for watching. Smash the thumbs up, because we ain't got one mother flipping thumbs up on this video, but I don't flipping care. All right, so cheers to that. We'll catch you later. Luke W. out. Peace. What?